Hello and welcome. This is Brandon Wendell, Charter Market Technician, and I'm going to do a little bit of analysis on the U.S. equity index futures markets. So we're starting off right now with a weekly chart of the S&P 500. I had mentioned a while back that I believed there to be a head and shoulders formation that was breaking. And if you take a look at the trend line that I'm drawing in here, this is the neckline, so to speak. And if I get that right, there we go. You can see that we have actually broken the neckline. We had a close below, had a retest of the area, and still have not dropped away very far. We had an initial push to the downside, but we haven't made the measured move. Typically, the measured move is going to be the height of the head extended downwards from the breaking point. So we have not gotten there yet. Let me go ahead and fix this. And I'll even change the color just to contrast it. There we are. So duplicating this, or just moving it either way, you can see that our measured move should be somewhere just under 4,000. And looking at the charts, we actually, on the weekly chart here, do not have any kind of demand until about that area. As a matter of fact, our first area of demand that I would consider is right about there at about 39.26. Let's see if I can get that exact as I now put in the snap mode. There we are, 39.2650, 38.51 and a quarter. So we are getting a little bit of a pull back upwards right now in the equities, but I think that's going to be a short-lived move. In the long term, we're going to continue to push downwards into a potential bear market. And if you take a look at where we are from the highs altogether, there's the high, and we did have a move as low as 14, almost 15%. Currently, we're trading at only 9% down, so we're back in correction territory. Bear market technically would be a 20% pullback, so that would even be below where we are right now. As a matter of fact, that wouldn't even be until we busted through our demand zone here. So we got plenty of room to go to the downside potentially. As we turn to our daily time frame, get a little bit more detail here. You can see we ended up having that breakdown, the neckline, and a retesting right now. Overall, what happened was, if we use Fibonacci extensions, you can see we had impulse, correction, and we extended, and look at that, we stopped right at our first extension, which is the 42.17, 61.8% extension. We're currently retracing and may retrace all the way up to a supply zone here. Actually, I'll leave that for a moment, but take out that first target, which is that 61.8. That leaves us for our next target if we do continue to push to the downside. But currently, we are moving up towards this area of daily supply, 44.2275, 44.84.50. And you can see we're having difficulty as we rally up getting much above 50, let alone 60. That's a very bearish signal for the markets. So we're still in a very bearish trend on this time frame, and I do believe this supply zone should hold, but we may need to go up there first before we start turning back downwards. As far as a retracement, I think that's a pretty deep retracement of our previous move. If we go ahead and change this to a retracement, yeah, you can see that's a retracement so far, 78.6%. So if we do go a little higher, I mean, that's a bit unusual. You can see today we're actually fighting to try to make a new high. It looks as though this may be as high as we go before we collapse. But if we do try to go higher, the 44.22 is likely to hold and push us back down for new impulse. What I wanted to see was if the target lines up. We had the first target here, 39, excuse me, 39.89. And then if I also use the Fibonacci extensions on this time frame, with the pullback again back to this 44.22, you can kind of see that lines up pretty close to the demand zone of 39.26, 39.40. And if I bring back the one that's missing, which is the 61.8, yeah, that brings us back down to our prior lows. So either way, I just don't see us getting above that 44.2250 area at all. So I believe that we're going to continue our downward trend from that area. So just keep an eye out for that. And of course, if we do come up to the supply, we can get above 60, then all bets are off. We'll continue to go higher, but I just don't see that happening. Even if it did, we had another supply zone that we're going to run into almost immediately above at about 46.06. And there's just a lot of overhead pressure, and we're in a downward trend, so we're likely to continue to make lower highs and lower lows. Oops, sorry, wrong keystroke here. Let's go down to the 4-hour chart. Now, looking at the 4-hour chart, I believe we have supply right around the same area. You can kind of fine-tune this a little more, but it looks about the same. You've got rally-based drop right there, and that's 44.48. So instead of 44.22, it's a little bit higher, 44. 48 if you're looking for the entry. As of today, though, as you can see right now, we've got a high. We're retesting those prior highs. But as we retest those prior highs, the only way you make new highs is with more momentum. And looking at the momentum indicator below, I happen to be using RSI. That is showing less momentum than before. That is called a negative divergence. And a negative divergence usually means you're going to get a move to the downside very, very soon. So this is suggesting that prices should drop, not rally. And you can see we're struggling to make new highs today. So if we pull back, we might get a little pause. I don't know if that's a good zone anymore. We really used it. What I was looking at was that buying pressure that came out of here. Problem is, that's not an original move. It's a retest of this rally-based rally right here. So that's been the tested portion of the zone, not likely to hold. That means if we start collapsing from the highs currently, remember on the daily, we were at a retracement value of 78.6, so it might not go any higher. And if we get this divergence holding where we start selling off from this area, our first target to the downside before we bounce is probably 41.59 a quarter. If we are to go a little higher, we're still going to run into the overhead supply. So there's not a whole lot of upside potential left on this market. And going down into the 60-minute time frame to kind of fine tune everything going on, you can see that we are somewhat bullish because we can't go back below 40, even though we gapped down in the overnight Sunday. Oh, hang on. Dogs are going a little crazy in the background there. Okay, just chasing ducks apparently. Anyway, you can still see the weakness as we try to make these new highs. We're really failing to do that with any kind of momentum. You see the momentum is much less than it has been before. That's not sustainable. For you to make new highs, as you can see that we've done before, like right here, broke out to a new high. Well, guess what? We did that with a little bit more momentum, at least close to the same, not that much less momentum than we had on the previous peak. And that even didn't last all that long where we started dying off. You can see the negative divergence at the peak where, again, prices went up while the indicator just kind of went sideways and said, not really interested in going up higher. So that is a negative divergence right there. Higher highs in price, lower highs in the momentum, we drop. Same thing here. You can see the current candle is a topping tail on it. That's a lot of selling pressure suggesting that we may start pushing down very, very soon. As far as any really good demand zones, it's all been taken before. This was the origin of the rally. This was the retest early Sunday night going into Monday, and doesn't look like it's going to be able to hold again. On the 60-minute time frame, the nearest area of demand that I'd be watching for is down here. And that means that prices could collapse all the way down initially to about 41.92, so just under 4,200. Psychologically, that'll trigger a lot of sell orders that should continue to push to the downside. Anyway, if we want to go ahead and look at a smaller time frame, I can look at the 15. You can see we're rolling over already as we've lost a lot of our momentum. So let me move over to the NASDAQ, and we'll start off once again on the weekly time frame, going out to the NASDAQ. There we are. And I was doing some notes from another class there, so I'll go and remove that. You can see on the NASDAQ, we've gone into bearish territory on the RSI on the weekly chart. So this is extremely bearish. Even though we did get a bullish candle, we confirmed this low by making higher low and higher high on either side of this kind of hammer candle. Most people would look at that as a bullish opportunity, which I would too normally, except we did it with the formation under 40 on the RSI. So that suggests lots of bearish activity. So, we did this before. We tried to have a hammer type candle. People think, oh, we're at the bottom, we're going to rally, and then we fail again. So we did come down into some of this basing. It's actually been used a couple times before. This was the origin, drop, base, and rally. Go ahead and draw that out for the zone. Hit that wrong right there. And you can see we tagged it again, but this time we're doing a lot more bearish momentum than bullish. So I don't see us being able to break this prior high as we rally. So there's no way we're going to get above the 15,260 because we had too much bearish momentum when we kicked off this rally currently. So let's see where we might be going. We go to the daily time frame, and we do have an overhead supply for us. Right here, depending on how you mark it, you either have rally, base, and drop at 14,381, 14,668, or you have drop, base, drop, a little bit wider, 14,250, which is kind of pushing us down already. So on the daily time frame, it's not a great move out, but it did breach prior lows, as you can see right there. And I'm going to get rid of this. It looks like we might be able to go down again. As a matter of fact, if we want to figure out where we're headed to, we could take a look to see if there's a daily demand anywhere below. As we go back in time, we're going to have to use a continuous contract to really see any kind of detail, unfortunately, so I don't have that currently for us. But we could also even use projections to see, is there a hint based on the previous impulses down and the correction back up that we currently experience. So you can see that would be our first fresh new low we made at 12,911. And then if we continue to push down for new lows, 12,058 would be target number 2. Target 3, 11,450, and 10,677. We'll have to keep an eye out for that. This is all very, very bearish. Now, what I'm seeing right now, we're up against that daily supply that is kind of holding us down. We can't get above 50, let alone 60, to get any kind of bullish momentum here anymore. If we go down to the 4-hour time frame, see what we're looking at here. And we did make a new high, but again, we did this new high with no momentum. It's another divergence. So that's not likely to last throughout the day. We're going to probably pull back pretty sharply before the end of the day today. This is Monday that I'm recording this, because we don't have the momentum to sustain the new highs. Okay, we were able to put in a low right here that we were not below 40. You'll see, this is one of the reasons why I love the RSI. When you make a low in price, but the RSI is below 40, when you make that low, you generally do not make a new high on the subsequent rally. You can see right there, we paused and pulled back. We couldn't make a new high. On this pullback, however, we did not go below 40 on the RSI while price pulled back. So the next move up did take out prior highs. Well, once again, we've pulled back here, and you can see we were not below 40. So it's not really a surprise we were able to make a new high today, because we were supposed to, based on momentum. Again, right there, you got your previous day's high. We break out because we had the pullback that was not below 40, but now we're above 60. We're seeing some bullishness, but we don't have the momentum we had before. That's not sustainable. And it looks like we did try to peek through supply, though. It wasn't really a great supply zone, to be honest with you. We have kind of a rally, or drop, drop, base, 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 and then a drop here, but that's not really strong. It's trying to hold, but it's not something I would have marked off as a supply zone. I would have marked off this area more likely, a little bit higher. Rally, base, and drop right there. Not even the best either, because it had some difficulty getting below the prior lows. So the NASDAQ has been somewhat of a leader to the upside. It's not the leader, the Russell is, but it's something I'll be keeping an eye out for on the bullish side, because if we have divergence like this and this leader gives up, that means those weaker markets are free to fall a little bit faster. We drop down to a 60-minute chart, see if there's anything that changes here. You can see the weakness coming in price, where we got bigger topping tails happening today in the last couple hours. The bigger the topping tail, the more selling pressure is creeping in. This is still pretty bullish altogether. So lots of underlying strength here, just a matter of whether or not it's going to be able to sustain itself. We also happen to have a drop, base, drop supply zone in the area. So it could give us a little bit more weakness, but I don't see the NASDAQ. Whoops, wrong button. There we go. I don't see the NASDAQ as the leader, though. And there it is with the lower lows after drop, base, drop. Might start to turn around if we hit that area, because again, on the bigger picture, we have divergence. It's saying we've got weakness. Might not even make it there. And as we drop, well, nothing great as far as demand really until this area. So we could get a pretty good fall in price down to 13,500 area. 554 technically, and then there's another demand zone down below. Actually, rally, base, 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 and rally. That's it. So it looks as though we're getting ready to turn back down, and our targets would be 13,500 and then 13,193. We drop down a 15-minute chart. I'm not sure we're going to see anything different, just seeing, again, the weakness coming in with the red candles. So going to the Russell, Again, starting off with the weekly chart. And we'll clean this chart up without any lines on it. There we go. So looking at this, this has been extremely weak. You can see lower highs, lower lows. We're in a bearish trend officially. From the highs, let's see how much we've lost. We've gone into bearish territory, as a matter of fact, 22, almost 23%. Right there, we went over 23% on the pullback. Even now, with a little bit of recovery, we're still in correction territory, down about 16.5% roughly from the highs. So on the weekly chart, definitely a bearish trend. We tried to rally a little bit. It looks like, I think, on the rally, no, we didn't quite hit. We have, that's not a zone, actually. I'm mistaken there. There's no real supply zone, although drop 1, 2, 3, 4, 5, 6, and drop, that's your zone. It's quite large in comparison to the other, or the size of the zone. The move down is not as large as the width here. So that's not a great zone, but overall we're in a bearish trend. And it looks like it wants to continue. I go down to the daily time frame, and we're actually just basing right now, but we're basing with bearishness. You can see we tried to make some new moves up. As a matter of fact, we even made lows where we weren't below 40, but we failed to make new highs. And on the daily chart, we are pushing today into a daily supply zone. Right there, rally-based drop. I guess you could even consider that rally-based base drop. But the main thing is, as we're moving up, we're not going to get through all that selling pressure because we don't have the momentum. So the fact that we may be putting in a high here, we'll have to wait and see. If we can push down later this week on Tuesday, tomorrow, if we make lower high and lower low, with this being our high below 60, that means that we should break the prior low before the end of the week, meaning that prices will be able to continue below 1883.1 before the end of the week. Going to the 4-hour chart, well, we got some underlying bullishness, but again, weakness is key. We have prices trying to make new highs, but doing it without the momentum needed to sustain those highs. So we got that divergence suggesting we're likely to come crashing back down pretty soon. And we don't have anything great. It's kind of a weak supply. So this is more of like a fizzling out. I guess it's not a bad supply zone. You have drop, base, drop right there. But it didn't break to fresh lows. So that's why it may just kind of fizzle out and drift downwards rather than seeing a huge move to the downside that you would normally bounce off of lots of selling pressure. That means when you go to smaller time frames, you get a lot of choppiness in price action. That's kind of what we're experiencing today. Even down on the 60-minute. Oh, before I do, you can see that our first move to the downside should take us to this target of 1917 to 1883, drop, base, and rally. That would be my first target. So going to the smaller time frame, 60-minute, again, you see us kind of rolling over. We still have the divergence, although not quite as severe, but it's still there. We should be making new highs because prices, and we're not. So we're coming into that daily supply zone or 4-hour supply zone, whatever it was, looking like we're going to get a pullback, might get a small bounce here as we retest the origin of the rally at 2014. But ultimately, I still think we're going to be able to head down. We might get a small bounce again at this area of demand, 1944. Keep in mind that this 1917, however, that's from the higher time frame. Ultimately, the goal to move to the downside before we get a significant bounce. These will be little speed bumps where we might pause and go a little sideways. So going down to the 15-minute time frame, you see the choppiness today. Rally, little chop, rally, little chop, rally. Now we're getting a bigger piece of chop, spending more time there as well. And finally, the Dow. Go again to the big picture. There we are on the weekly chart. And once again, lower highs, lower lows. We are bearish on the trend. And if we look to see how far are we from the highs, currently trading about only 8% from the highs. We did reach a high of 12% down. So the Dow actually held up better than some of the other markets did in the move to the downside. You notice we also didn't go below 40 on the RSI. That's a positive for the Dow, showing that there's not enough weakness to really break down too much as of yet. So going to the daily chart, we are still trying to chug to the upside, and we do have an area of supply just overhead at 34,558, 35,060. maybe forming demand here. We just have to wait and see what happens. Not quite a demand zone yet. And looking back to see if we do turn from that supply zone, where we might go. Unfortunately, I'd have to go to a continuous contract to really get a good picture of where we're likely to go. But I can also look to see on the previous impulse and the pullback. There you go. We had a measurement, basically a duplication of the previous impulse. See right here, that impulse was duplicated. So if we're getting another pullback, maybe we get another impulse that's duplicated. So if we were to happen to pull back all the way to that supply zone, again, we go from high to low to our pullback point. Pretty close. Takes us right back down to our prior lows, but if we duplicate, it'd be 3976, just below 31,000. That could take us much, much lower psychologically. That'd be a pretty big barrier if we move down. On the 4-hour time frame, I don't know if much changes. Let's take a look. Remember, this has been holding up much better than the other markets. As a matter of fact, you can probably even draw a trend line. Not quite yet, but it's kind of close. And not really seeing anything major as far as great supply overhead. Again, it's just that daily supply that I first looked at. So still somewhat bullish, but again, we're diverging. Actually, we can't even make a new high here. During the day, today, after we gapped down, the Dow is the weakest market trying to recover. It can't seem to recover the gap closure as the other markets have. And you can see why. The momentum is very, very bearish. So this may be one of the first ones to fall if we start turning around. Dropping into the 60-minute time frame, trying to refine this. We have rally base and the gap down for supply, which happens to be what we're pushing into as we speak. We do have a move above 60, so actually this will not be the first to fall. I think that the Russell or the NASDAQ may take over the title and actually overtake the Dow to the downside. We do have a first target down here of 32,947, but honestly, if we start moving down from where we are right now, we've been above 60, we'll likely bounce before we can break 33,461 on the downside. And you would most likely see us kind of going sideways and choppy with the Russell and the NASDAQ leading us down first before this does. But there's the red coming in as we speak, as we're pushed up against a little bit of supply here on the 60-minute chart. We go down to the 15, we're probably seeing that weakness as well with the mixed colors. Yep, right there, red and green coming up as we came into that supply. Notice the momentum is dying off as well. So we're going to experience a bit of a pullback. It will not go below 33,400 on the first move. Then if we pull back on the 60-minute here, yeah, as we move down, if we rally back up and we don't go above 60, then expect it to drop for price. So that's kind of what I'm seeing for this week. I think I went through all 4 of those markets, give you kind of an idea of what to expect. Looks as though we're kind of at a turning point now where everything should start to turn back to the downside for the remainder of this week. Yep, looking at that momentum dying off. There it is. So until next time, everyone, trade safe, trade well, and take care.